Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Don Kaufman from Theo Trade. Great to have you both with us as always. Don, you know the drill. Big picture thought, it's Fed day. We are seeing a bit of a mixed picture right now as I take a look at the big board ahead of the decision at 2 p.m. Eastern. What are your thoughts on the action we're seeing?
Yeah, this marketplace right now has got some pent-up volatility, if you will, and it's all waiting specifically for this Fed announcement. I mean, you start to look out even past the Fed announcement. Let's not even decide what that's going to look like, but into Thursday and Friday, this marketplace is going to move, and we're trading basically in the exact same range for the last 7 trading sessions. So again, look for some big movement off of this Fed announcement, but more as a catalyst than anything. It seems like, look, the cut is effectively priced in. I am of the opinion it's 25 basis points, but whether he's going to have that hawkish tone or not is really, I think, why we have that pent-up volatility.
All right, Don, so we're going to get to your first pick for the big three. I know you like to be a bear, but I have a feeling based on the news and taking a look at the charts on this one that we may have a bullish trade on our hands here. We've got Exxon Mobil. They did just raise their forecast for their earnings, for production, for some of their margin numbers. Walk us through this first pick. And are you bullish or bearish on this one?
I am going to take the bullish side right off the bat. Here we go. I'm going to take a bullish side on XOM. And what I'm looking at over here just happens to be, well, we're kind of butting up against some of the all-time highs, like new highs in and around that 120-ish. All we have to do is hit right into the 120 and let retail basically come in and do the rest. And what I mean by that is, once again, we're looking at kind of a squeeze situation. I've been looking at these very, very often, looking for stuff that's butting up against all-time highs or, multiple year highs. When I say let the retail, traders come in and do the work, we hit 119, 120, which is pretty much where we're trading right now in Exxon Mobil. And what you're going to see is retail call buying is actually going to burst the stock, if you will, to the upside. It's got a high probability of doing just that. So in Exxon Mobil, I'm looking for retail to kind of take us to some of those highs by, in fact, buying calls. So I'm going to go out to the January 16th expiration. I'm going to give myself a little bit of time over here. We're going to hit the holidays. Things could kind of slow down. Jan 16 expiration. I'm going to buy the 120 call, and I'm going to sell the 125 call. So it's a very slightly out of the money call spread. It's a $5 wide call spread done for a $1.55 debit, all predicated in the idea that we're, again, going to kind of break out to the upside here.
All right. So as we look at the technicals here, Rick, on Exxon Mobil, I can see we've got an upward sloping channel. We know that they've been moving to the upside here. What do the technicals indicate to us?
Right, very close to that 120 resistance level that Don highlighted here. Our pink line, if you backtrack, you can see that was a notable high right before we had our severe decline heading into that tariff news announcement shock that gave us our low point here for the year. Since then, we've recovered. Our green line here, 115.50, was our high point. See how frequently that was another stopping point for price here before this period of chop and gradually grinding upward prices here. For now, though, we still haven't taken out these old intraday highs near 120.80, even though our trend line going along the lows has pretty much held firm. So now we are quite close to that resistance area. We haven't gotten the breakout just yet here, but a push above that area could trigger the cascade of orders that leads to that very energetic price reaction that can happen sometimes here. When we see our moving averages, yellow 21-day comes in just below 117. That could be a short-term supportive area, but some traders might have their eye here instead. The orange 63-day EMA near 115 lines up quite closely with our trend line, as well as our repeated resistance area, our green line 1550. So that could be a more noteworthy area to follow. When we look at momentum, RSI has been very gradually compressing in a triangular type pattern here. For now, though, we are above the 50 midline. We are making new relative highs along with price here. So that would be more of an encouraging sign for the bullish crowd. When we look at volume profile next, we can see that our node that we have closest here, right around that same 115 level once more. So a key downside area there to watch out for. We also have a bit lower, 112 or so. 112.50 was the low points that we saw here. This area also includes our 252-day EMA and our volume profile point of control. So notable supportive areas there. If we do keep moving higher, +2 standard deviation channel currently comes in just below 123. That could be an upside area to keep an eye on.
And trading just below that resistance level that you both highlighted right now at 119.42. So we're close to 60 cents off of that level for right now. Your next pick, Don, though, JPMorgan had a bit of a rough day yesterday, traded down more than 4% to close the day after their spend for 2026 may be a little bit higher than expected.
Yeah, so, I took that into account, but my trade, this next trade here in JPM is going to definitively be bearish, and it's kind of a significant bearish call. So right now, JPMorgan has actually been trading weak relative to the financials. When I do trades, I don't necessarily like to look at like one underlying. I like to look at that underlying versus its peers in the sector. And this is, one of the biggest and baddest in terms of the financials. And it has been, again, weak on a relative basis. The other aspect is you're going to see in the technicals, this thing's been, if you will, stuck in the middle with you. It's trading 300, 320, 300, 320. It's a stock with a nail in its foot. This recent break yesterday, I think, is actually going to take us into some lows. We're going to break through 300 and away we go. And that's exactly how I'm going to trade it. I'm going to look for the break under that 300 to ultimately trigger a nice bearish trade. The trade is all the way out to the February 20th expiration. So this one, I'm really kind of giving myself the gift of time. It's not that I don't feel really secure in it. It's, look, JP Morgan's going to have earnings coming out in January. I want nothing to do with that. Becomes a little bit of a coin toss. But I'm bared up, and I'm going to give myself plenty of time for this to kind of play out. I'm going to buy the 285 puts, and I'm going to sell the 275 puts. So it's a big $10 wide spread done way out to February 20th for a $2.30 debit. Nice risk reward if this stock does break down.
All right, so as we take a look here at JPMorgan, if they do break down, I see we're going to walk through I see you have convergence there over in your chart here. But as we're looking at technicals, walk us through what we're seeing here. You can see that they've been moving to the upside, but as Don pointed out, underperforming some of the other financials. Right,
so 285 to 275, right about here. That's the area that you would be looking at for that type of trade. And if you backtrack, 280 was an important level here. It was an old high point. It's where we had our breakout point. It's where we touched once again supportive. Old resistance became new support. Then we have rallied from there. So 280 stood out to me. Also 292, our darker green line here. Notable low points several times here, with a corresponding ceiling around this area near 318. We had our highs 322.25, but that didn't last. It was a very quick retracement here back down to that supportive area. So range bound, as Don said here. You could also draw a trend line going across these lows here, giving us our white trend line. That's about where we bottomed out yesterday. We did make an intraday move below that point here, but we have recovered somewhat today. So look out to see if that continues to hold any significance going forward. If we do start to break below that trend line, it could open the door to 292. So now we can see our moving averages that we follow, 21-day and 63-day, and yellow and orange respectively, pretty close together, near about 305 to 308 or so. So that would be another resistance confluence for price to push above here. A close above those levels would signify perhaps some strength here, but really we would want to see a breakout from beyond this range one way or the other to see an increasing measure of directionality here. Kind of like our last chart, RSI compressing in a more triangular pattern here. We are in the lower end of the spectrum. This time, though, we're below the 50 midline, even though we did hang on to that green trend line there. So you would want RSI and price to be moving in tandem here, so look out for that as well. Our volume profile study shows here we have a volume node near about 310, and we also have one here near about 300. So those are kind of the two potential congestion areas for price to be on the lookout for. And if we were to move lower, 292, our level we highlighted earlier, that's where the volume really starts to drop off below that point too. So you could see some fast moving prices there. And then 275, the area that we mentioned before from Don's trade, that's where the next volume node is to the downside. So that also stands out as potentially supportive.
And right now, 306.32, trading up more than 25% so far on the year for JPMorgan. This last pick, I'm guessing, is Fed related. You've got the TLT bond ETF in here. We've certainly been talking about bonds in advance of the Fed decision here, and also with Jerome Powell's departure and a new Fed chair coming in. Walk us through this pick.
Yeah, this is it. This is Fed trade. This is, you have to throw your hat in the ring for the Fed announcement. This next trade, though, is only going to be literally between now and Friday's expiration. I'm actually going to hop on trend in the TLT. So here's the whole take for the Fed announcement. They come out, they cut a quarter point. The question is, what is Jerome Powell's tone going to be? Is he going to be hawkish, or is he just going to steer clear, stay quiet, stay quiet ultimately until May and go into retirement very, very quietly? And I have questions about that one. Is he going to fight a little bit and fight the current administration? And obviously they want to lower rates. He's going to lower rates, but you might hear a little bit of a hawkish tone, and that is really the camp that I am in. And I'm in that camp simply because they don't have enough data to support anything. There might still be inflation going on. There's more questions than there are answers. I think you have to take a hawkish tone. As such, what I'm going to do is I'm just going to go into the TLT. I'm going to hop on trend. TLT has been selling off a little bit lately. I'm just going to go to the December 12th expiration. That's this Friday. This is put it all on the line over here, right? I'm going to buy an 87.5 put. It's trading for somewhere in the neighborhood of about 27 cents right now. Moves around almost penny for penny with the TLT. It's a cheap shot for the downside, looking for, again, some of that hawkish tone and bearishness in the TLT right here in the near term.
All right, so as we look at the TLT, we know how erratic the bond market has been. And obviously that would be reflected here. What are the technicals showing us?
So 87.23 was the break even on the trade. 87.25 is the area that I highlighted here because it was a series of high points that we had before our breakout to the upside. Now things seem to have fizzled a little bit here. We do have this gap to look out for to the upside between 89.16 and 89.95. That was the high point after our gap here. So that would be an area that the bulls would want to clear. But then we can see here that we also had a low point, 85.50, a small gap there. That was the low point 2 times after that as well. So a couple areas to watch in terms of our horizontal price levels. Now when we look at our moving averages, they are clustered together right on top of each other here near about 89 or so. Clustered moving averages typically suggest either price activity that's so choppy it's not really able to find a direction in terms of these moving averages, or more range-bound trading. In this case, it seems to be more of the chop, kind of like just a lot of big swings that we've seen for this product here. But now, though, we can see the faster moving average, our yellow 21-day, is crossing below its slower moving peers, which is a sign of the bearish trend could be accelerating here. RSI also shows this. We have a downward sloping trend line. We're below the 50 midline. We were making new relative lows during the past couple of sessions here. So, more of a bearish lean according to this indicator. Volume profile shows that we have some big volume areas here. 86.68 is where the point of control comes in. That also lines up with our -1 standard deviation channel. So 1 standard deviation below our teal linear regression line. So that would be an important area to the downside. Also 88, right about where we are now. That's another node. And then a heavy trading area above that really starts to thin out once you get beyond 90. That's where things really start to drop off.
All right, and with this TLT looking for that 87.50 put right now at the 88.33, but a very short play here with a Friday expiration. We'll get that decision later today at 2 Eastern. Don, I want to thank you for being with us. Don Kaufman, the co-founder of TheoTrade, and of course, Rick Ducat, our lead market technician here on the network, for breaking down the technicals.